Folks were mad at me on Facebook last week because I told my friend that her decision to buy a house was a bad one. My friend felt like buying a house meant she was #winning, but actually, buying a house is a terrible investment. Many believe that home ownership equals wealth, but you're much better off renting and putting extra money you would use for a down payment into liquid investments. By liquid, I mean something you can sell immediately if you get into a financial pinch, such as stocks or bonds. First, renting is cheaper than ownership. Everyone thinks that somehow this can't be true, but it is. Nationwide, from 2012 to 2016, the average median monthly gross rent was $949. Owners pay an average of $1,491. People think that if they buy a house and it appreciates in value, they earn the difference. They think paying rent is like flushing money down the toilet. Blah, 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 blah. Let's debunk that myth right now. Shelter is a basic human need. So if you're flushing money down the toilet by paying rent, the same could also be said about paying money for other basic human needs, like food. Renters also save money on things like homeowners association fees, property taxes, plus fees for your real estate agent, closing costs. And anything that goes wrong with the home you own, you'll be stuck paying for it all out of pocket. Everything. You lose. Second, houses do appreciate in value, but not as fast as the stock market. Between 1969 and 2004, average home prices rose by 6.4%, but the average size of a house doubled during that time. And if you throw in inflation, that basically accounts for the increase. The S&P 500 has risen by an average of 9.8% a year for the past 90 years. Look, investments should be based on evidence, and evidence says that on average, renting and reinvesting wins in terms of wealth creation, regardless of property appreciation. Home buyers, you lose. Third, home buyers who take out a mortgage don't actually pay the sticker price. For a $300,000 home, you're actually going to end up paying an additional $250,000 just in interest. Then you'll pay another $80,000 in taxes, insurance, and other fees. So you literally need to sell the home for twice what you bought it for just to break even. And that's if you pay it off. For the first few years of a mortgage, you're just paying interest because mortgages are structured to keep you from paying off your principal, the actual money that goes towards the home, until the very end. You lose. Instead of paying interest, you could be earning it. Interest rates are rising right now, which not only means that it's more expensive to buy a house, it also means you'll earn more on investments. Instead of paying the bank, invest your money and let the bank pay you, playa. Look, homeownership is a crock, it's a sham, a rigged game. You can still play if you want, but odds are, you'll lose. If you have opinions about this topic, please share them right here.